Hi, and welcome to Emerging Markets Emerging Core, the latest in a series of educational webinars developed by IndexUniverse.com. I'm Matt Hougan, editor of both IndexUniverse.com and the Exchange Traded Funds Report, and your host for today's webinar. The format today is very straightforward. I'm going to deliver a presentation for about 30 minutes talking about the role of emerging markets in client portfolios, and why I think many investors systematically underweight emerging markets. Then, I'll bring in my two distinguished panelists for an interactive audience Q&A. I'm pleased to be joined today by two of the world's leading experts in both emerging markets and exchange-traded funds. Luciano Siracusano is the Chief Investment Strategist for WisdomTree Asset Management, a company that develops dividend and earnings-weighted ETFs, including some of the most interesting emerging market ETFs on the market today. Tom Lydon is president of Global Trends Investors, an ETF-focused advisory firm with an international tilt. He is also founder of the news and analysis site ETFtrends.com, one of the sources I turn to on ETFs on a daily basis. As host, it's my job to deliver platitudes usually about the quality of my guests, but in this case, there's no need. As a reporter and an analyst, I keep a mental Rolodex of my favorite go-to sources, and Tom and Luch are at the top of the list. I've never once asked them a question without getting a thoughtful, well-reasoned answer, and I'm pleased to have them on the panel today. So let's get started. What exactly is an emerging market? The truth is, there is no one answer. Countries that some consider emerging, such as China or South Korea, have already emerged according to others. But there is at least a structure that Wall Street has developed for discussing this. It basically breaks the world down into three buckets: developed, emerging, and frontier. The lines are constantly blurring, but we can agree on a few big points. Developed markets are countries with a high level of income per capita, high GDP, and a high degree of industrialization. Here we're talking about countries like the U.S., Canada, Japan, Australia, and basically all of Western Europe. Frontier markets are on the other end of the spectrum. They're sometimes referred to as the next generation of emerging markets. These markets appeal to investors with a very high tolerance for risk who are looking for the potential for outsized returns. And here we're talking about countries like the Ukraine, Vietnam, Lithuania, and parts of the Middle East. That brings us to the middle, to emerging markets. It would be easy to say emerging markets are everything that aren't developed and aren't frontier, but that's too easy. Emerging markets are really their own class. They're transitional societies that are undertaking real domestic economic and political reforms, trying to get into the category of developed markets. They also happen to be some of the world's fastest growing economies. And here we're talking about countries like Chile, Colombia, Mexico, Peru, much of Southeast Asia, a lot of Eastern Europe, and of course the so-called BRIC countries, Brazil, Russia, India, and China.